Good evening. I call to order the regular meeting of Council for November 3rd, 2021. We're starting at 6:01 p.m. I'll move on to item 2, confirmation of agenda. I'll turn to Council first. Are there any emergent items from councillors tonight? Deputy Mayor Montgomery.
Thank you. I'd like to add an item regarding Community Futures Committee, please.
Thank you. None from administration, or did you want me to speak to that second one?
Through you, Mr. Mayor, we have 2 committee appointments that we need to deal with tonight. Community Futures and Wheatland Lodge, and I would recommend that those be 8.5 and 8.6 respectively. I'm not sure if the Community Futures appointment is the same one that Councillor Montgomery is raising, so we're the same one. So just those 2 then. Thank you.
Thank you. And just to clarify for people at home or councillors who are with us right now, we did get contacted by Community Futures and Wheatland Housing Management Body that it would be really beneficial and helpful to them if we could use tonight to try to confirm board members for them. So that's why these 2 items are being added to our agenda. Any other items from councillors or administration? Seeing none, then we'll need a motion for that to confirm the agenda as amended. Deputy Mayor Montgomery.
Thank you. I'll move the agenda as amended, please.
Thank you for that. We have a motion on the floor to confirm the agenda as amended, and I'll call the question. All in favor? And thank you, Councillor Wiley. I had forgotten you were zooming in. Thank you. We have no presentations or recognitions tonight. We have no delegations. We do not have a consent agenda. And we're now on to confirmation of minutes. I believe we're just doing are we confirming any minutes? We didn't have minutes for the organization meeting. Okay, so that's one we can skip on. We have no tabled items, and that brings us to item 8.1. Under items reports from administration, we have 8.1 Finance 101. And Mr. Mel Teedy is presenting tonight. Welcome, Mel.
Good evening, and thank you, Your Worship. The town is a creature of the Municipal Government Act, or the MGA, and some of the material that we're going to be talking this evening comes from Part 8, Financial Administration. Within the MGA, there's provision for a requirement for a 3-year operating budget. We update that budget annually, and the budget that we're going to bring forth to council later this month is for the 22 to 24 operating years. The 5-year capital budget, also updated annually, will be for the years 2022 through to 2026. Budgets must be balanced. So transfers to income must equal expenditures. Major operating revenue items that we'll be talking about include taxes, user fees, government transfers, franchise fees, investment income, and license revenue. Operating expenditures include salaries and wages, benefits, contracted services, materials and supplies, debt servicing, long-term debt, and grants to organization and depreciation, or we use the term amortization. Our financial reporting requirement, we're required to have an audited statement to council and to the province. And we also provide to council a quarterly financial update. This picture describes our particular situation. We've got a plan or a roadway to travel. If we deviate from that roadway, it might be a little problematic. So we need to kind of stick to our plan. The long-term financial plan, and we're going to be talking about these items this evening. Property taxes and tax adjustments, our utility charges, franchise fees, other user fees, government grants, the use of debt, unrestricted surplus and reserves, investments, and infrastructure deficit. Levels of service and work plan, our budget. Council approves a corporate business plan budget, usually prior to the start of the year. Having the business plan adopted prior to the start of a new year provides direction and the ability to implement work plans at the start of a year. This is a real important concept. If you were put in the place of a manager in operations and we don't have a budget at the beginning of the year, he wouldn't know what direction to follow. So having a budget at the beginning of the year is an important piece of our plan. There is a direct linkage between the budget and our tax rate. Our corporate business plan addresses levels of service and the associated cost to provide that service. New initiatives, programs, and services will have an associated cost that needs to be recognized and funded with new revenue, property tax, or other funding. And that comes right from the long-term financial plan. New initiatives that arise during the year, once a budget is passed, during the year requires a recognized funding source. So if initiative is considered by council, we'll need to have a source of funding that new initiative, whether it's from reserves, borrowing, or otherwise. Efficiencies are also recognized with an associated cost reduction. Budgets are prepared in accord with town policy number 1809, our budget policy. So for the 2022 budget, we met with council in May of this year to discuss emerging and council priorities. Then from June to August, we sought input from our operating departments as to revenue and expenses to implement the priorities and services set forth by council. Council endorsed the 2022 budget business plan in September. We're meeting this evening as part of council orientation, and then we're desirous to bring forth a presentation to council on the 24th of November for the corporate business plan or budget presentation. And we'll be seeking council's support on that. So the plan for 2023 is to meet in January with council to develop their strategic plan. And then again in June to discuss emerging and council priorities. And then from those two meetings, we're going to be seeking input from our operating departments as far as revenue and expenses to implement the priorities and services that were established by council. And then in November of 22, we would meet with council to approve a 2023 corporate business plan or budget. So those are kind of the key dates and time periods and meetings that we would be looking at for the budget process. Okay, the 2020 audited financial statements. During tonight's meeting, we're going to be looking at some of the highlights from our 2020 audited statement during this presentation. The statement of operations reports the revenues and expenses for the fiscal year January through December. The statement of operation provides details on which transactions have been impacted, accumulated surplus from the beginning of the year to the end of the year. So if you think about it, every time we have a transaction, it affects our accumulated surplus. So the totality of all those transactions will affect our accumulated surplus at the end of a year. Non-cash items such as amortization, which is depreciation, and contributed assets are included. But what is not included on the statement of operations is payments on long-term debt. We have to tax for long-term debt payments, but they're not part of our income statement. They're part of the balance sheet. Those transactions, payments on debt, are changes to our balance sheet, not to the income statement. The income statement does not include transfers to and from reserves. So these are some of the nuances just to be aware of as we look at the income statement. So the first section that we'll look at this evening, the top section of our consolidated statement of operations, are our income statement. The notes referred to on the presentation that you're looking at, note 12 and note 13, are the notes within the audited financial statement itself. So for 2020, we had revenue of $31.6 million, and that compares to $28.587 million in 2019. We had net municipal taxes of $12.9 million, user fees and sale of goods of $14.8 million. The biggest part of that is utilities, and we're going to be looking at the utility numbers in more detail. Government transfers for operating, so $2.6 million, and that is monies that we receive from primarily the provincial government. Investment income, $505,000, and so on. Total of 31.6, and our budget was $30,543,000. So we were over budget, and that's a good thing. Any questions on any of the material so far? Okay, property taxes. Property taxes are one of the two largest revenue sources for the town. We had net property taxes of $12.9 million in 2020, and that is 42% of the total revenue. Now, if you look at the $12,931,000, 1% of that is $129,000. So as we consider budget impacts on any of our services, as far as an increase in service or a decrease in service, if it's an increase in service, $129,000 equates to 1% property tax increase. That's a real important number to consider as we move forward. 80% of our taxes come from residential, 20% comes from non-residential. So our first line, real property taxes, that's our residential. That refers to our residential taxes. Linear refers to gas lines, power lines, that type of thing. Business taxes are our non-residential taxes. So any commercial or industrial tax, that's part of the business tax. And then government grants and place of property taxes. We have 2 properties in town where we receive a grant from the federal government for the RCMP building and from the provincial government on the courthouse. And then out of the taxes that we receive of 18.6 million, we pay in the form of requisition to the Alberta School Foundation of $4,995,000, Christ the Redeemer of $556,000, and $143,000 for Wheatland housing. So total tax less requisitions is the net municipal property tax. That's the net amount that we have to work with as a town. Again, we have 2 tax rates, one for residential, one for non-residential. During this evening, we'll be talking about municipal indicators. One of the indicators from the province is that we have more than 5% of our taxes from a non-residential source. So we're at 20%, we exceed the provincial minimum indicator. I think we missed one. Thank you. So residential tax rates are applied to houses, residential condos, mobile homes, 3 and 4 plexes, vacant residential land, and apartment buildings. Non-residential tax rates are applied to commercial and industrial properties, including vacant industrial land. Linear is collected from TransAlta power lines, wells and pipelines, cable distribution, telecommunication lines, and linear property is assessed by the province. We do not assess linear properties, and we've talked about the government grants in place of property taxes. Property taxes that are generally not collected on the following: land and buildings owned by the provincial, federal, and municipal governments. And there's only the 2 that I referred to earlier, the RCMP building and the courthouse. In 2020, Town Council passed a bylaw to exempt, upon application, certain charitable parcels or parcels owned by charities. We have not made an exemption for any other property other than the municipal golf course. They're the only one that we have applied an exempt status on. If there are charities that come forth, we can bring that to council if they own their land and building. The other thing is churches and places of worship are also exempt. So what does that mean for the town? Well, all the schools in the town are exempt. The hospital, the health region facilities, churches, WID, Strathmore Ag Society, the nursing homes, seniors lodge, libraries, the Legion, with the exception of their commercial operation. They have a commercial operation within the Legion that is taxed, and the golf course is exempt also. So those are the properties within the community that are exempt.
Mel, quick question for me.
Yes.
Is it typical in municipalities to exempt golf courses, municipal or public courses?
Many are exempt, yes.
Okay, thank you.
I believe they are, yes. There's a small portion that is taxable and taxed, yes. Okay, the tax rates are set in the annual tax rate bylaw, which comes to council typically in May. Tax due dates are June 30th. Alternately to that, we have the tax installment payment plan, or the TIPS plan, where property owners can pay for their taxes monthly over the year. Property assessments may be appealed during the 60-day appeal period. Typically, we send our assessment notices out the first week in January. So January through March would be beginning of March would be the assessment period, or the period to appeal the assessments. Taxes may not be appealed. You may appeal the assessments, but you may not appeal taxes. We have two tax rates, as I mentioned. The tax rate is a function of the property assessment roll and the budgeted tax revenue. The individual property taxes then are based on the tax or mill rate and the assessment value. Properties that were annexed in 2010 by the town from Wheatland County will have the tax rates applied until 2039, the Wheatland County tax rates, that is, unless they're subdivided or have a planning redesignation on those lands. Yes, we do, and that's on the next slide.
Mel, can I ask you a question, please? So if Wheatland County adjusts their residential rates, then we would adjust ours for that annexed land as well?
Correct.
Okay.
So before we pass our tax rate bylaw, we need to get their tax rate bylaw and insert the tax rates on those properties into our tax rate bylaw.
Okay.
And we've been following that practice from the time of the annexation until now.
Great. Thank you very much.
The property assessment is the means by which the property tax burden is equitably distributed in accordance with provincial legislation and regulations. Property assessments are audited by the province with a 2 or a 3-stage audit process. So we file our assessment rolls with the province in December, and they have to pass their audit process. And periodically, the province comes out and does a much more detailed review of our process and of our assessments. And we've had that process done at least once in the last 12 years and perhaps twice, but I think it was at least once that we've had that process completed. So we have 5,942 residential parcels, 52 farmland parcels, 186 commercial, and 150 industrial properties. So we have just over 6,300 parcels of accessible, and we do a review of 20% of those parcels each year. We talked about the exempt parcels earlier on. There are 117 exempt parcels and 172 town-owned parcels. Almost all concerns regarding assessment are handled on an informal basis without going to a formal hearing. Just a few comments on assessment values. Since the start of the downturn in the oil patch 5 years ago or so, the assessments for the motels and hotels in Strathmore have dropped appreciably, significantly. Also, retail has dropped somewhat as far as the assessed values.
Is that provincially or just our town?
Well, certainly our town, but I would say probably the same in other small towns also. I can't comment about the cities, but I can comment on our town, and I think we would be very comparable to other towns where crews would come into the local town and take up a lot of motel space. They're not doing that anymore and haven't been now for a number of years. So we've had our challenges in terms of maintaining the same level of assessment values. We've done okay. And whatever growth we've had in terms of new starts and new development has only offset the downturn on those properties that have decreased in assessed values.
Do we have large surplus of unpaid taxes as a result of the last 18 months?
We have done surprisingly well. We will be looking at our accounts receivable here when we get to the balance sheet, but our tax receivables are about $100,000 or less of an increase compared to last year. We've been very fortunate. So we've talked about the town collecting taxes on behalf of the province for education and on behalf of Wheatland Housing. The education tax, $5.5 million. Wheatland Housing, $143,000. Requisitions form 31% of our total taxes. Education, the education requisition is paid to the province quarterly. And that certainly affects our cash flow. And Wheatland Housing we pay typically in the first quarter of each year. Okay, our tax rates. Strathmore has one of the lower non-residential tax rates and the lowest tax differential between residential and non-residential in the surrounding communities. So our residential rate 6.452 and our non-residential rate 7.793. So our non-residential rate is 21% over our residential rate. In High River, it's 30% and so on. So the communities that are lower than us, as far as non-residential rates, Cochrane being the lowest, Chestermere being number 2, and then Strathmore number 3 as far as the lowest non-residential tax rate. Now you need to consider that the town has a robust offering of recreational opportunities and facilities, but we have one of the lowest non-residential tax rates. You can almost go so far as to say our residential tax rate is subsidizing our non-residential tax rate. In the larger cities, you can see that the differential is quite significant, and the non-residential tax rates are significantly higher than the smaller communities. Any questions on this?
Brent at home?
Yes, go ahead, Councillor Wiley.
So I noticed that I'm just trying to educate myself here. It says that we are one of the lowest tax differentials in the surrounding communities. What is the advantage to that?
Having one of the lowest differentials? I'm sorry, there is no advantage. I think the idea has been that a lower tax rate would invite greater investment into the non-residential area. It would encourage business opportunity and what have you.
Okay, thank you.
Thank you.
Another one of our problems has been Strathmore as a town doesn't own a lot of property that we can encourage or attract business to other than those southlands where we got the solar farm to go. There's still, I'm thinking, close to 200 acres there. But other than that, we don't have a lot of land as a town to attract investment. But with that overage being so low, that's the idea, is that you hope, you think that it's going to attract more non-residential to the town. So that's something we have to try to work towards, I think, too, to find ways to get more long-term businesses here or industry. Thanks, Bill.
Thank you. So the second area, as far as revenue, user fees and sale of goods. In that category, we had $14.8 million of user fees and sale of goods, compared to $13.499 million the prior year. The largest category is our utility charges. So we're in the business of selling water, sewer services, solid waste services to the community. And our total revenue reflects that fact. We're going to be, we have additional information on our quarterly update on our utility operations. The second large area within this slide is our franchise fees, and we're going to be talking about that separately. Our rental and lease revenue comes from primarily our recreational buildings and the Civic Center. We get a little bit on fines and goods and services. So, utilities. We started down the road 4 years ago with a full cost recovery model for our utilities. In other words, we wanted utilities to look after and pay for themselves and not have a support from our taxation. They're completely independent of taxation, and now they've been that way for about 2 years. It took a bit of time to get there. In 2020, we implemented a flat monthly charge on our utility invoices. So for water, sanitary sewer, and solid waste, the monthly charge for each of those categories was $1. Stormwater was $3. And then in the 2021 budget, we increased that flat monthly charge to $1.25 for each of the 3 categories of water, sanitary sewer, and solid waste, and $3.75 for stormwater. In 2020, the amount we collected from those charges, $386,000. And that's being used to pay for our capital program for the utility department, along with the interest on that program. It comes from those charges along with the fees that we charge also. So the monthly cost for utilities in Strathmore, based on 15 cubes of water, would be $158 in total. So that's water, sanitary sewer, solid waste, and stormwater charges on a utility bill. If the customer uses 15 cubes, it equates to a charge of $158. And we supply, as I mentioned earlier, a separate financial report on our utilities. Utilities are not broken out in our audited financial statement.
Quick question.
Yes.
How does the monthly cost of utilities in Strathmore compare to surrounding communities? Have we looked at that?
We've done specific reviews of that. At one time, we were the highest, and then a few years back, Chestermere took that honor away from us, and we've been less than Chestermere since. But it's difficult to determine accurately because of the fact that some communities support their utilities out of taxes and some do not. It's really hard to make a real valued opinion. All you can do is compare utility bills, but that's not the full story. In some communities, they support utilities out of taxes, and some they don't. We've chosen not to. We want our utilities to stand on their own. Thank you. So, franchise fees. Franchise fees are regulated by the province. They set the maximum amount of fee. It's an important part of our town budget. In 2020, we raised $2.1 million in revenue from our franchise fees. And here's something to think about. We have these exempt properties that we talked about earlier. The franchise fees are our only way of recovering any revenue from those properties. So there's streets, there's sidewalks that go by each of those facilities, and we don't collect anything other than from our utilities and our franchise fees from those exempt properties. Franchise fees are included as a local access fee on the natural gas and electricity invoices that a customer gets. Fortis and ATCO collect those fees from their bills and from other marketers of that service, and then that's remitted to the town. The monthly franchise fee for the average homeowner in Strathmore is $14.50 for natural gas, and that's based on 10 gigajoules a month, and $12.92 for electricity, based on 640 kilowatts per hour, or pardon me, per month.
Question, is there going to be franchise fees from the solar farms?
No, I don't believe so.
Okay.
Because they wouldn't be they might be a minor user of electricity, so we would get a franchise fee on the electricity they used if any electricity was billed to them. But I can't see that happening. There may be a little bit of natural gas billed to them for whatever building they have, but that would be the only part.
Thank you.
Government grants, capital. The province has provided funding to Strathmore for both operating and capital programs. Provincial MSI capital grants end in 2024 and become local government fiscal framework at an anticipated rate of 50% of what we received prior. So we're anticipating $1.4 million in 2022. In 2021, we received $3.5 million for capital from the province. And in 2020, we received $2.8 million, and the 1.4 is based on the $2.8 million. Canada Community Building Fund, formerly known as the Federal Gas Tax. In 2021, we received $800,000. Any of those grants require that you meet certain qualifying criteria in order to claim an amount under the grant. The only other capital grant the federal government provided in 2017, a Canada 150 grant, but federal government grants are very limited, and we have very limited ability to get grants from the feds. Operating government grants. FCSS operating grant, we received $306,000 in 2020. There's I believe it's a 20% spend component. So we received $306,000. We have to spend an additional 20% of that amount to qualify for the $306,000. The policing grant that we received from the province, $408,000. We received MSI operating of $101,000. Sorry? Municipal Sustainability Initiative. Recently, very recently, we agreed to recreational grant funding with Wheatland County. It started this year in an amount of $403,000. That's a major milestone with the county. Okay, any questions on the revenue part before we get into expenses?
Mel, do you want to just maybe for the new counselors, in case anyone doesn't know, just tell, like, maybe speak on what MSI can be used for?
Well, the two components, one, the operating piece, there's pretty much anything that we can do of an operating nature within the town. The capital has to be used for specific types of capital infrastructure, either buildings, roadways, certain equipment. Those would be the major capital pieces that we could spend money on. So buildings, roadways, sewer, water and sewer lines, that kind of thing.
And we used MSI funding for the new town hall as well, didn't we? We've earmarked a certain number of years.
Yes, and we're using some of the MSI money in future years to pay for the borrowing we did on this building. That has a limited number of years though, 5 years.
Sorry, question here. I see here in the slides that it says that it's the MSI capital grant is expected to be reduced by about 50% in 2024.
Correct.
Okay. Are we expecting other grants to make up for that shortfall?
No.
And I assume that is the same story for the local government fiscal framework as at MSI operating that you have at risk written next to.
We're anticipating that probably will disappear. They've talked about that disappearing. They have not done that, but it's not a lot of money. The 100,000 is appreciated, doesn't go too far.
Thank you.
Any other questions? Okay, let's take a look at expenses. We have two ways of displaying our expenses. In the first section is expenses by department. And the second way of displaying them is expenses by object. So in the top part, you can see each of the departments listed along with the budget and the actual for the 2020 year and the 2019 year. And then we have the different categories of expenses by object. So salaries, contracted and general services, materials, bank charges, and so on. As far as the largest expenses, administration, police, fire, ambulance, and enforcement, the second largest, transportation services, so our roadways, is the third category. And if you look at it from an object expense category, salaries and wages, the largest expense, contracted and general services, second largest, and we'll be taking a look at those two in a future slide here. The expenses by object are shown in the audited financial statement as a note. They're not in the, we utilize the top in our income statement, and the bottom one is as a note in the financial statements. So there we are. Salaries. 2020 salaries, wages, and benefits, they're 37% of our total expenses. One of the benchmarks that we've used is being under 40% of total expenses. If we have felt that if we're under 40% as far as a guide number, that's where we want to be. The salary and wage grid used by Strathmore is at 50 percentile compared to our municipal peers. In other words, 50% pay more and 50% pay less. We use the term P50 for that. Our benefits are competitive and include LAPP. Contracted and general services. So we have a few major contracts that council should be aware of. $2.2 million for RCMP. The town currently pays 70% of the RCMP costs as our population is under 15,000. Once the town crosses the 15,000 threshold, we're anticipating that we will be paying 90% of the RCMP costs. Other contracts, our water is supplied by the City of Calgary through NMAX with a master servicing agreement that expires in 2035. In 2020, we paid $1.28 million to the city. Our water, wastewater, and stormwater services are supplied by EPCOR. We have an amended agreement with them that goes to 2028, and we paid $2.7 million, almost $2.8 million last year. Our solid waste services are supplied by Waste Management. There are 3 different agreements, and we paid $1.1 million for those. Those are some of the major contracts that fall into the contract and general services piece on the financial statement.
I have a question. So if the City of Calgary votes for the fluoride, we're under contract till 2035. There won't be any additional costs for that?
The rate that we pay, the billed rate that we pay to the city, it has 2 components. One part is a cost per cube, and the other component is a daily fixed charge that we pay. So both of those are what we currently get billed on, and so if they put fluoride on, I don't believe we would be paying any extra charge because that isn't within the parameters of what we're paying currently.
Okay, thank you.
Am I coming through very clear?
Yes.
Okay, so I want to go back to page 29 on expenses. I was just looking, and so back to the revenue page, we had a revenue of 31.6 million. And we have expenses last year of 33.95 million. I'm sure everyone else in the room knows the answer to this, but what happened? Why is there a $2.35 million deficit that year?
Good question. One of the expenses in the expense category is a thing called amortization. Amortization is a non-cash expense. Amortization is what we book or recognize as a cost of depreciation of our physical facilities, our tangible capital assets. So the 5.6 represents the depreciation on our buildings, our roadways, our water lines, our sewer lines, sidewalks, all of the tangible capital assets, our equipment. It's a non-cash expense, as I mentioned, and that's why we could and do have a deficit.
So is that something that's being budgeted for in the next budget?
Our amortization is included in each of the budgets.
So was this an unexpected amount that we went over, or was it expected?
It was expected.
Okay.
We can speak to it when Lisa presents our audited statement. She'll perhaps speak to it a little bit more.
Mel, so amortization, correct me if I'm kind of wrong. So it's essentially, recognizing, like you said, the amount that our assets are depreciating as they age, with the idea that after a certain amount of time, we'll have to replace some of these assets. Should some of that amortization go towards reserves, or does it already?
We'd very much like to set aside reserves for our amortization. At one time, and I'll speak to this a little later in the slides, at one time we were setting aside amounts to cover the amortization for equipment. Because of the tightness or difficulty we've had over the last several years in balancing our budgets, that is one thing that has gone by the boards. We have not set aside in our budget money to replace any of our assets other than the utility charges that we've talked about earlier, our flat charges that are on the utility statement. That's the only contribution to reserves that we've made a conscientious decision to set aside money for.
Okay. All right. Thank you.
Thank you. Thank you. Amortization, $5.6 million in 2020, and it's 17% of our total expenses. As I said, it's non-cash. In other words, we're not mailing checks out for it. It's money that it really recognizes the use of the asset in that year. Contributed assets. Contributed assets are reported as other revenue on the statement of operation, and this also is a non-cash revenue. So what is a contributed asset? Contributed asset, for instance, are the assets from developers such as roads, sidewalks, water and sewer lines in new subdivisions. It's the value that the developer has paid to provide to the town those tangible capital assets. It's an important concept. Are there any questions on this?
Is that in addition to the off-site cost levies?
Well, the off-site cost levies are a cash transaction. Off-site levies are paid to the town. Contributed assets are not paid to us. They're given to us. The asset is given to us, but the developer pays for those assets at some point in time when he has them erected or completed.
Okay, thank you.
Statement of financial position. One thing to understand is an income statement. We've just looked at different accounts within the income statement. They are for a period of time, typically 1 year or 1 quarter. A statement of financial position is at a specific date, either at the end of a quarter or at the end of a year. So the financial assets on our balance sheet, in this case, are at December 31st, 2020 or December 31st, 2019. There are 4 things that make up our total financial assets: cash, taxes and grants in place of taxes receivable, so our tax receivables, and that relates to the question earlier in the evening. What is the effect of our tax receivables compared to the prior year? Our tax receivables at the end of 2019, $590,000. At the end of 2020, $600,000. So they went up $10,000. Trade and other receivables, they stayed approximately the same, and our investments decreased from $16 million to $15,272,000. So total financial assets, $19.8 million at the end of 2019, $22.3 million. The cash and investment balance represent the liquid portion of the financial assets of the town. We can convert our investments to cash relatively rapidly if we need to. And that's what that's referring to. Taxes and grants in place of taxes receivable represents uncollected taxes at the year end. Under legislation, taxes are collectible at the sale point of a property if they're in arrears, and there are always some people in arrears, and basically the town will always collect their taxes. It's very rare that we would ever write off taxes, and the one area that we can get caught up on are mobile homes if the mobile home disappears. So the municipal indicator for tax collection ratio, 95%, and we're at 97.87%. Not bad considering COVID-19 and the deferrals that we did in 2020. Investments. Our investments are made in accord with the Cash and Investment Management Policy 1803. Investments are used to fund reserves and represent funds for future operating and capital expenditures. Our total reserves at December 2020 is $9.4 million. And our investments at the end of 2020, $15.2 million. So the difference between the two, the $15.2 million and the $9.4 million, we try to maintain fully funding our reserves. So we never want to have our investment account balance go below what our reserve balance is at. If we have $9 million of reserves that council has established, we want to have the cash in place to have available for those reserves. So the difference of $6 million roughly is to fund operating and capital expenditures during the next 6 months until 2021 taxes come in. That's a real important concept to understand. We need that cash difference in order to operate in future months. And I look at it as a stress test. If we don't have cash set aside at the end of a year, our operations can be hampered. And we're going to talk a little bit more about cash and cash management yet this evening. All of our investments are guaranteed by the organization providing the financial instrument. So typically that would be a Canadian bank or a government, and it's required with our cash and investment policy. Currently, we're invested in bank bonds, some with specific interest rates. 2/3 of our portfolio have specific interest rates, and some tied to the Canadian TSX. If the TSX goes up and those bonds become more valuable, we'll cash them in, we'll flip them and take the gain. 2020 average investment balance was $14,951,000, and we had $505,000 investment income for a 3.4% rate. The comparable for 2019 was 2.2%. 2% represents the typical bond rate for right now. We're not getting a lot of money from our bonds, but we managed to do a bit better in 2020. And so for the town, we got a little bit higher rate of return. Any questions on investments?
I haven't reviewed the investment policy lately. Do we have anything in there that talks about like minimum rates for bonds that we would invest in?
No, it is not included in there as a minimum rate. The market sets the minimum rate, or the market sets the rate.
Yeah.
We just react to it.
Like I know there's times when bonds can go negative though, and that we would like there's something that would prevent investing in those, wouldn't there be?
Well, we've always done very well. CIBC Wood Gundy, who manages our portfolio, I think has done an outstanding job on our behalf. We've typically, the 2.2% has been the lowest rate that we've had over the time period that I've been here. It's always been in excess of that. 3.4, probably the second lowest rate we've had. The bond market is not real good right now and has not been good for a number of years. But it's the risk investment that we're willing to take. We could invest in other things, I suppose, if we didn't want a guaranteed rate of return, or if we don't want the financial interest investment guaranteed, but we're required to have a guaranteed investment as far as the MGA. We can't put our money into other investment vehicles.
I have a question as well. So excuse me if this is just totally amateurish, but I'm taking a look at the investments, and we have about, it looks to me like $15 million investment, and we have a $24 million debt. The interest on our debt each year is $600,000, and the return on our investment is about $500,000. Can you help me understand that?
We're going to be talking a little bit more about debt in the next section under liabilities, and I think it'll become clear, perhaps a little bit more clear. The debt that we have with Alberta Capital Finance cannot be repaid except on the specific schedule of repayment that was established at the time that debt was taken out. The town
Yeah, that makes sense.
The town has not always had investments of this magnitude, but if we're going to have reserves, we need to have the investments. We could diminish some of our reserves, and we could diminish some of our debt, I suppose. But this is kind of the structure that we've operated within for a long time, and it's quite common for municipalities to both have investments and have debt. Does that help?
Yeah, I mean, it helps to hear that it's common. It helps to hear that it can't be instantly repaid. I guess I'd just be curious of exploring that and learning more. Like, to me, if I'm running my own house budget and I have investments that are earning me I wish I had investments earning me $500,000 a year, but I have a debt losing me $600,000 a year. I would want to see if there was a way I could restructure that.
Yes, good point. When we talk about debt, I'll talk about some other aspects of the debt also.
Hey, thank you, Mel.
Thank you. So, liabilities. We have two large areas of liabilities: our accounts payable and accrued liabilities, and long-term debt. The accounts payable and accrued liabilities are amounts that we have not yet paid to vendors. Our deferred revenue, and this is an important concept to understand, deferred revenue is grant revenue we have received from either the province or the federal government or from wherever, but we have not spent the money on the particular program. So we've received the money, but we haven't spent the money for which it was intended to be used for yet at that point. So long-term debt, $24.4 million. Total debt, $31.5 million. Current ratio. The current ratio is a measure to see if the municipality is able to pay for its current financial obligations using cash or near cash assets. The province measures this, and we are not measured, as our total assets exceed current assets by a factor of 2 or more. The thing to keep in mind with some of these municipal indicators, they're minimum standards, something like minimum wage. Nobody wants to work for minimum wage. And these are the same type of things. So it's just something to be mindful of. We're going to be looking at some of the other municipal indicators as we go along and near the end of this presentation. Long-term debt. So the debt obligations for long-term are owed to CIBC, CMHC, and that is only for one borrowing for the water line. When the town built the water line back, that debt was taken out in 2010. Alberta Treasury, which was formerly the Alberta Capital Finance Authority. So we owe money on a long-term basis to those three. And as I said, CMHC only for one project. The debt limit imposed by the province is 1.5 times the operating revenue. So our debt limit for 2020 at the end of the year was $47.5 million. Our actual long-term debt, $24.4 million, and we're about 51% of the debt limit. Again, that's the municipal indicator, that's the municipal measurement. We don't necessarily want to be at the limit. So with that in mind, we have included in the long-term financial program a debt limit, a self-imposed debt limit of 50% with restrictions on new debt to essential services for water, sewer, or our utilities and protective services. So another measurement is our provincial debt service limit. There's a defined limit of 25% of our operating revenue. And if we measure the 2020 operating revenue, that would indicate a $7.9 million debt servicing limit. We came in at an actual of 3.6%, or we're 46% of that debt limit. So what does debt limit refer to? Debt limit refers to the interest and principal payments in the next year. So using that measurement, our debt repayment and our debt interest to be paid in 2021, we were at 46% of that limit. We have debt repayment of approximately $3 million in each of the 2021, 2022, and 2023 years. And that is defined in Note 8 in the audited financial statements. Long-term debt at the end of 2020, the $24.4 million. We had a weighted average as far as our interest rate, 2.7%. The interest was $618,000, and that's in Note 14. So what did we spend all that money for? We spent it on water, sanitary sewer, and stormwater, $8 million. Administration, $8.2 million. So the administration piece is for this building plus $3 million that we took out alone for emergency and working capital. Recreation, $6.7 million. Roads, $1.2 million. And culture, $300,000. The town took on an emergency working capital loan of $3 million, and I mentioned that just a minute ago, with a 3-year repayment of $1 million per year, and we have paid the $1 million on that already in 2021.
quick question. Was that COVID-related emergency funding? Thank you.
Yeah, it was. At the time we took it out, we had a working capital shortage, and we didn't know where we were going in terms of taxes or utility receivables, and we took it out as an insurance line, but part of it was to shore up our working capital. Non-financial assets on our balance sheet. So prepaid expenses, a small amount of $161,000. So what are prepaid expenses? They're amounts owed to vendors primarily for services such as insurance. It's paid at the beginning of the year, but the service occurs during the year. Tangible capital assets, what are they? They're the amounts that we have paid for our capital assets, and they're itemized a little further down on the page. They're used on a continuing basis in the town's operations, have a useful life of a year or more, and examples are roadways, underground utilities, buildings, wastewater treatment plant, machinery and equipment. This building that we're in, it's a tangible capital asset. So that's the net book value. Original cost less accumulated depreciation, or less the amortization.
I have a question. Does the town own all their own equipment? Are there any lease options for equipment?
We have not leased a piece of equipment. Typically, the lease option has a higher rate of interest built into the lease than what we can borrow for. Say if we were to lease a grader, they would typically have a retail interest rate component built into that lease where we can borrow money at wholesale rates. So it makes more sense for us to borrow the money and own it compared to leasing. Accumulated surplus. Accumulated surplus consists of internally restricted and unrestricted amounts and equity in our tangible capital assets. So what do we mean by equity in our tangible capital assets? Just like if you were buying a house, taking a mortgage on it, you bought a house for $100,000, we wish, and we borrow half of it, we would have our equity expressed as $50,000 in that home. And so in this case, the equity we have in our TCA, or in our tangible capital assets, we own $196,000 of our surplus is tied up in our capital assets. We have surplus in reserves of $9.3 million and unrestricted surplus of $253,000. So the municipal indicator is to have a positive net amount in restricted and unrestricted surplus. So our unrestricted surplus, $253,000, our internally restricted surplus, or our reserves, $9,394,000. So we're well above the minimum standard. Any questions on this concept?
Is it possible to have a negative net amount in an unrestricted reserve?
In a restricted reserve?
Well, in either of those, because the municipal indicators
So I guess the best example would be if we did not have any reserves and we had a situation where we had a catastrophe or a major expense we were not expecting, there could be a time where a municipality could have a negative amount in that area. The requirement from the province is to bring that to a positive amount within a period of time. You have to, if you get in that position, you have to budget for it, you have to handle it. It's not a place you want to go. Unrestricted surplus. So the unrestricted surplus, or the amount of surplus that is not tied up in reserves, provides funding for unanticipated needs. The unrestricted surplus account totaled $5.9 million in 2016, and the $253,000 that we looked at just a moment ago in 2020. Significant future funding from the unrestricted surplus account currently is not available. The rebuilding of the unrestricted surplus will come from future budgetary surpluses.
Mel, would you be able to comment for the new councillors and people watching at home where some of that unrestricted surplus might have gone?
Yes.
What were some of the things?
We will be looking at that momentarily. Reserves form a portion of the accumulated surplus. The Operating and Capital Reserve Policy 1807 was adopted in 2021. The purpose of the reserve policy is to provide sufficient future resources to fund the acquisition or construction of new capital assets and the replacement or rehabilitation of major capital infrastructure. Operating reserves means the portion of internally restricted surplus that the town maintains or that council has designated or restricted for use in unanticipated emergent expenditures, mitigation of tax increases, or unpredictable decline in a revenue source. So reserves we set aside for specific uses. And if they're to be meaningful, they need to be backed by cash or investments. Reserves fall into three categories: operating, capital, and off-site levy reserves. Council approves the creation and use of operating and capital reserves either by motion or by budget approval if it's built into the budget. Off-site levy reserves are a result of the off-site levy bylaw and come from charges and payments from developers and are utilized for specific named projects in the off-site levy bylaw. We do not have control on the off-site reserves other than to spend those funds for the specific named uses. We can't rename those reserves and use them for other well-meaning intention things. They have to be used for the specific purpose. The operating and capital reserves in 2016, not including off-site levies, totaled $7.6 million, or 28% of the operating budget. The operating and capital reserves in June 2021, not including off-site levies, totaled $4 million, or 12.7% of the operating budget. The available reserves to meet future needs as a measure of the operating budget over the past 5 years have diminished from 28% to 12.7%. And if you look at it in terms of days, number of days we could operate on those reserves, it would be 46 days. We could operate approximately 1.5 months on our reserves if we had no other cash and just had to pay for things out of reserves, not including capital. The rebuilding of reserves will come from purposeful transfers from the operating budget to reserves. That's the only way you build reserves. Cash resources needed. So cash plus investments less reserves are our financial resources to pay the anticipated operating and capital expenditures as needed. And so that's a real important concept. What do we need to basically pay our bills? Cash plus investments less our reserves. That's what we have to pay our bills. Adequate cash resources needed to start the year would equal 50% of the net municipal taxes and 50% of the year's capital program spend. So January 1st, if we were to apply this measurement, we would have on hand 50% of our operating budget and 50% of the next year's capital program to get started. The first quarter of the year has a higher cash demand due to some expenses that are paid on an annual basis. So for January 2021, the start of this year that we're in, if we measured those resources, it would equate to $10.2 million. We should have in the bank an amount of $10.2 million in excess of our reserve balances. So cash plus investments less reserves. What we came in at was $7.7 million. So at the end of 2020, 11 months ago, our cash really was in a deficiency of $2.5 million. So this slide answers the question, where did the money go? The town has purchased $55 million of tangible capital assets over the past 5 years. Buildings, roadways, pathways, water and sewer projects, machinery and equipment. That amount comes right off of our audited financial statement. These assets were funded as follows: $27.1 million for government grants, borrowing $18.1 million, reserves $9.8 million. That's how we funded that $55 million. Government grants, borrowing, reserves. In addition to that, the town has funded operations with reserves to maintain a reduced tax rate over the past 5 years. We have subsidized our taxpayers rather than charge full taxation. We've dipped into our piggy bank to the tune of $2.1 million. Any questions?
Just a quick one. I had stated earlier when we were talking about where the money came from for this new municipal building that we did get grants for it. And so MSI is considered a provincial grant, is it not?
That is correct.
Thank you.
question. How much of the 2.1 million that we took from reserves to limit taxes happened in the 0% in the last year? What percentage of that 2.1 million would have been a result of that?
How much did we take out of reserves this last year?
Just on the tax, on coming in with that tax rate? I don't need an answer today.
I don't recall the amount, and I could supply that number on a by-year basis for those 5 years to equate to the $2 million, and I will send it to council. I will get the amount and I will send it to council. Any other questions on that? Okay, community organizations and support. We have a number of community organizations that we support in various ways, financially or through in-kind or both. Strathmore and District Chamber of Commerce, we've typically provided them with a grant and no in-kind service. Strathmore and District Curling Club, they have use of the curling club building, and so that's an in-kind support. Strathmore and District Ag Society. We have financial transactions with them, so there is some financial support, not in the form of a grant, but in the form of providing them with water on a no-charge basis. And the thing with them, they also occupy a space in the recreational building, which has a lot of history to it, and I don't want to get into it, but there is a number of moving parts with that, where our interest is in them is to keep them financially sustainable. We have an interest in doing that. Strathmore Municipal Library. They have use of the building and we provide them with a grant on a per capita basis. I think one thing we could do in that realm would be to have a written MOU with them that would acknowledge and commit the town to funding for them. It would provide increased certainty for that organization. Wheatland Society of the Arts, we provide them with a grant. Wademsa, they provide a dispatch service for the town. The one thing to realize with them is that there are competing services, and at a lower, we would anticipate if we were to make a change there, it would be at a lower amount for that service. Strathmore Handybus, we provide a grant and they have use of the land. They own a portion of the building they're occupying with our service department, where our mechanic is located at the old town hall site. We're working with their board on arriving at a suitable MOU, and we anticipate bringing that back to council in the future later this month.
Question, Mel, is there a reason, and I don't understand, I guess, a little bit of this part, is there a reason that we don't do Strathmore Handy Bus the way we do Wheatland Housing Management Board with a requisition versus a grant? What would be the rationale for that?
The handy bus does not have the authority to requisition, where Wheatland Housing does have the authority under the MGA to have a requisition.
Okay, thank you. And does the municipal library, did we used to requisition? And they do requisitions, don't they?
Well, they send us we fund them. We do not have an agreement with the municipal library. And we get an invoice from Marigold. We have an agreement in place with Marigold.
And in the library, is it a per capita funding that we
The
do?
municipal library is based on a per capita.
Okay, thank you. I've always found that confusing, a requisition versus a per capita funding.
Well, in the strictest sense, requisition can only be made for education and for seniors housing.
Okay, thank you.
Happy Gang, they utilize a portion of the Lambert Center. We do not give them any direct financial support other than the use of the building. Happy Cat Sanctuary and Society, they provide a service and receive a financial amount from the town. Golden Hills School Division, we have joint use agreements on 2 facilities, our Civic Center and the Strathmore Motor Sports Center. FCSS groups, we have grant supports going to a number of different organizations within the community under the FCSS area. There's the municipal indicators. We've gone through some of them. This is a page right off of municipal affairs. We pass on all fronts. There isn't an area of concern here at all. But as I said, they're kind of minimum indicators. So, conclusion. The financial health of the organization is adequate, but we have some work to do. We need to stay the course with our long-term financial plan. We have good financial policies. We have insufficient resources for the future right now. For example, we are not funding the reserves adequately. Money is not being put aside to purchase equipment. We talked about that earlier. Facilities have deferred maintenance items that are not recognized financially. If you went through our facilities, there certainly are maintenance items that need to be attended to that we're not there with. Reserves are fully funded by our investments. Cash resources and reserves need to be grown, and our utilities are not funded by taxation, which is a good thing. Any other questions? Lisa Gregory will be presenting the second quarter financial update and a little bit more information on our audited statement.
Thank you, Mel. Does anyone need a comfort break? Should we have a motion for a quick recess?
Through you, Mr. Mayor, I was going to suggest that you take a quick break. We're an hour and 45 minutes into the meeting. We can either deal with the financial statements now, we can deal with the businesses and do it afterwards, or we can defer it to the next meeting, whichever is council's presence.
How does council feel? It looks like the agenda for the public meeting is fairly light.
Yes, it
so, Unless it's overwhelming, council, as far as the finances, this 101 session, this is probably our lightest meeting for a while.
It will be, I assure you.
Yeah, oh gosh. Oh boy. So does everyone want to keep soldiering on? Okay. Maybe a motion to have a quick recess?
Yes, please.
Okay, we have a motion from Deputy Mayor Montgomery for a recess till 5 to 8. Would that be amenable to you? Do you want to set, I think we're supposed to set a time. Jonathan's nodding. Do you want to set a time then in your motion? 5 minutes? Okay. All right, we have a motion on the floor for, we don't debate that, we just vote on it. That's correct. So all in favor of a quick recess? Thank you very much. Good evening and welcome back to the Financial 101 session for new and returning councillors. And we welcome Lisa Gregory on her part of the presentation.
Thank you, Your Worship and Council. I'll try and keep this brief because I'm sure you must be exhausted after all the financial information. I just want to point out a couple more items in the audited financial statements. So the first thing is the independent auditor's report. The auditor's report for December 2020 provides a clean opinion on the town of Strathmore's financial statements. This means that the financial statements present fairly, in all material respects, the financial position of the town of Strathmore at December 31st, 2020. I also want you to take note that the report contains a section on the other legal and regulatory requirements, and this includes the debt limit regulation, which Mel spoke about, and note 16, the salaries and benefit disclosure. So we met our regulatory requirements, but I'd like you to flip through your package and take a look on page 86 at the debt limit regulation, because it's a very important one to note. And then we also want you to look at note 16, the salaries and benefits disclosure. So please note that the mayor and council's salaries and benefits are disclosed to the public along with the CAO. So we wanted you to take note of that. The report also outlines the basis for the auditor's opinion, the responsibilities of management, and the auditor's responsibilities. So the next report is the management report. We also want you to take note of that. And this report outlines the responsibilities of management and council. So please make sure you read through that. So the next statement we have is a consolidated statement of financial position. I won't go through in detail on what that was. Mel already has done that. And then we have the statement of operations, the statement of changes in net financial debt. This explains the change in our net financial debt, and the cash flow statement, which identifies where cash came from and shows how it was used. The financial statements also contain important information and explanations, some of which are required by legislation, so they provide insight and background on the impacts of specific values in the financial statement. So this is the notes. So if you have a chance, please read through the notes as well. And then the final section is the supplementary schedules to the financial statements. So it starts on page 20 of the financials. It's your schedule of changes to accumulated surplus, the schedule of tangible capital assets, and the schedule of segment and disclosure. For Q2, I won't go into the details of Q2. I'm just going to have you make note of a couple of the statements that we provide that are not part of the audited financial statements. So the first one is the schedule of property taxes and grants in lieu. It is kind of a breakdown and in the notes of the financials, but we provide a little bit more information for you on here. The next schedule is a review of salaries, wages, and benefits. So we provide a breakdown of where salaries, wages, and benefits are going, how it compares to the budget, and we also include our operating consultants and contractor costs. So it's another statement we provide to you. We provide the schedule of utilities reporting in Q2, and Mel already spoke in detail about this. This is telling you where we're sitting, that we're recovering our costs for utilities. We have our schedule of reserves. That'll tell you how much we have. It's important. Mel went through it. And then the final one that we provide is our changes in accumulated surplus. Again, we're going to give that to you because it's really important. But we just wanted you to take note of what's different. And then that's it. And then we're done our financial presentation. So.
Thank you, Lisa. So I guess at this time we can carry on to item 8.2, COVID-19 protocol update. And Mr. Legore, are you speaking to this first?
Through you, Mr. Mayor, we've provided you with information on the latest information we're getting from Alberta Health Services for regulations and how to deal with COVID. And we're providing this information. We're prepared to answer any questions that council may have. We do have new occupancy loads for this room here for council meetings, which is somewhat restrictive, but I think it's quite manageable for us. With that, we're prepared to answer any questions, Mr. Mayor.
Thank you, Mr. Legore. Are there any questions from councillors for Deputy Mayor Montgomery?
Thank you. So my questions just revolve around, well, my first one revolves around just the occupancy load. Did we look at whether we could operate at 1/3 capacity, based on these numbers? Like, some of them look pretty high, and I'm wondering, like the track at the field house, it says 388, people. It seems to me we could operate at 1/3 capacity in that way. So did we actually look at whether we could operate at 1/3 capacity?
Through the chair, decision to follow the REP program is beyond just the 1/3 capacity. 1/3 capacity is one restriction that's, excuse me, a part of it. If a facility chooses not to follow the restriction exemption program, the REP, that also restricts access to the larger segment of the community, adults. Anybody over 18 plus is unable to utilize those facilities unless it's a one-on-one or as a private booking. So the decision to follow the REP program allowed us to maintain services and programs to the widest variety or the widest range of community members.
Okay. Yeah, and I think that's an important thing for people to recognize.
The other thing of note too, I apologize, is that the occupant load also includes, must includes building people that work in the building as well. So that restriction also implies so that it's not just people in the door, it's also any staff or any officials, spectators, etc., players on the course. It is also factored into that.
Okay, thank you.
Thank you, Deputy Mayor Montgomery. A question, Mark. Is Strathmore in line with other communities? How are they doing things? Where do we fit in? Is a good thing that I know the public might want to hear.
Through the chair, yes, Your Worship. Our decision to follow the REP program is in line with a lot of other communities that surround Calgary and area. Majority of facilities that I'm aware of, Okotoks, City of Calgary, Airdrie, Banff, etc., all are utilizing the REP program. Smaller communities may have initially, my understanding, Hazard or Rockford initially with their arenas, initially started going non-REP, but have now switched to go to REP to ensure that they're open for, again, the largest sector of the community.
Thank you. Councillor Wiley, did you have a question?
Yeah, sure do. Thanks. My questions are just to get some things on the public record. So in this report, it says something about our internal policy. Is that requiring proof of vaccination for our employees? So just what is our policy on requiring proof of vaccination for our employees of the municipality?
Through you, Mr. Mayor, we have a policy in place that vaccinations are mandated for all employees, and currently we're at 100% vaccination rate.
So the compliance rate for vaccination, 100% of the employees complied?
Through you, Mr. Mayor, that's correct.
How many employees resigned prior to the November 1st deadline?
Through you, Mr. Mayor, we have less than 2% of our total employees that did not comply, which is kind of a standard what we're finding and talking with other communities around the province.
Did this vaccination mandate include employees, like, for example, lifeguards that might have been under 18 years of age?
No, it does not, Mr. Mayor.
Just two more questions. With this policy, my understanding is the policy was passed through the administration. This was not put to council, to the previous council, correct?
Through you, Mr. Mayor, that's correct. Council has one employee, which is the CAO. The CAO has responsibility for all other employees in the community that work for the town, and under health and occupational standards, we determined that vaccination was needed, and we implemented a mandatory vaccination policy.
So is there an end point to this policy, like a point where, let's say, the provincial numbers would get to a certain place and then the town would feel able to take this off of a requirement to be employed with our town?
Through you, Mr. Mayor, we have looked at that as to what will be an end date for this policy, and we're not going to address that at this time. We're still going to leave it in place for time being. Any new hires that we are hiring, vaccinations are mandatory, and we're not getting any pushback from that. I was on a meeting with Dr. Hinshaw today, and there is no intention to relax any of these restrictions at this time. And so we will continue with our policy for now. Thank you.
Last question, I promise. So what's happening now is, for example, in Ontario and Alberta, they're starting to administer these third dose booster shots. Can you foresee a point where that would become mandatory as well in order to be employed with the town?
Through you, Mr. Mayor, we're not entertaining that at this time. Thank you.
All right, thank you.
Thank you, Councillor Wiley. Councillor Peterson?
Just have a very brief question, Mark and Mr. Pratzloff. It refers to the fifth line down on page 105. And there, just for the public record, there's some confusion, particularly among youth, regarding the need to be vaccinated or the need to show proof of vaccination. I just wonder if you would like to speak to that for the public. Thank you.
Through the chair, Councillor Peterson, any minor or anybody under 18 years old or age is not required to meet any vaccination mandates or show any documentation as long as they're participating in a or recognized recreation activity. If they are at one of our facilities to spectate, if they're 12 and older, they're required to show a documentation with their vaccine, negative test, or medical exemption.
Thank you.
Mr. Mayor, if I could just add one final point. I'd really like to recognize the staff and the excellent job they're doing in implementing these regulations that are mandated on us by Alberta Health Services. They take a lot of abuse from the public, and I really appreciate the work that they're doing at these facilities, because I can tell you they are subject to abuse.
Thank you for that, Mr. Legore, and I want to thank you as well, Mark, because I know you've been through a very stressful time dealing with the changes that have come your way, and you're in a new job position, so I appreciate all you've done and the staff below you. Thank you. We move on to item 8.3, change of municipal status, and I believe this is Councillor Mitzner's notice of motion.
So, Mr. Mayor, if I could just speak to it, and with Councillor Mitzner's permission. This is how council brings items onto the agenda. I really appreciate that Councillor Mitzner brought this forward. We were able to use this as an example. So you have a motion drafted that you're going to present later, so it's called a notice of motion. If you need help in getting one drafted, contact us. We're here to help you do that. You just read this into the minutes, and then it will come forward at the meeting that's indicated here, and this one will come forward to the December 15th meeting for council's consideration. So, Councillor Mitzner, you just need to read this into the agenda, and then it'll be on the December 15th agenda. Thank you.
Do I go? Whereas councillors have a duty to consider the welfare and interests of the municipality as a whole, and whereas a city may be formed for an area in which a majority of buildings are on parcels of land smaller than 1,850 square meters, and there is a population of 10,000 or more, and whereas the town of Strathmore recorded a population of 13,592 during the 2016 federal census, And whereas council may request the minister change the status of the municipality, of a municipality, notice is hereby given that the following motion will be brought forward at the November 3rd regular council meeting. The council direct administration to prepare a report on the costs and the benefits of the town of Strathmore gaining city status, the process of becoming the city of Strathmore, funding availability, and the time needed to complete the change.
Thank you. Does that notice of motion need to mention then the December 15th, 2021 regular council meeting?
That's when we'll be bringing it forward to report on it, Mr. Mayor. That's
Okay, thank you.
fine as is, thank you.
Thank you, Councillor Mitzner.
Thank you.
And that brings us to item 8.4, petition Parkwood Place signage. Yes.
Your Worship, would you like a motion to begin the discussion? As per 8.4 on the agenda, I would move that council accept the petition regarding Parkwood Place cul-de-sac and children playing signage as information, and that council direct administration to contact this group regarding Parkwood Place signage to inform them that signage will not be erected.
Thank you for putting that motion on the floor for discussion. Jonathan, did you have any comments regarding this?
Yes, thank you, Your Worship and Council. So the MGA outlines what parameters a petition needs to meet to be declared sufficient. For a petition to be declared sufficient, it must meet the following requirements. Only electors are eligible to sign the petition. The petition must be signed by electors of the municipality equal to the number to at least 10% of the population. A petition must consist of one or more pages, each of which must contain an identical statement of purpose of the petition. Petition must include, for each petitioner, the printed first and last name or initials of the petitioner, a signature, street address, or legal land description on which the petitioner lives, and the petitioner's phone and email address, and the date on which the petitioner signed the petition. Each signature must be witnessed by an adult person who must sign opposite of the signature of the petitioner and take an affidavit that the signature was witnessed. Are those persons entitled to sign the petition? Petition must have attached a signed statement of a person stating the person is the representative of the petitioner, and the municipality may direct any inquiries about the petition to the representative. The petition must be filed with the CAO, and the CAO is responsible for determining the petition is sufficient. You can see attached to the RFD on page, 111 of your agenda packet, that the petition was not signed by 10% of the population. The signatures on the petition were not witnessed, and there were no affidavits attached. There was no attached statement signed indicating the representatives of the petition, and the signatures do not include a date when the petition was signed. The signatures do not include telephone, email, street address, or legal land description of the petitioner.
Thank you, Jonathan. Deputy Mayor Montgomery.
Thank you. My question is for administration. So this is the second petition that we've had come before us in the last 4 months, let's say, and both are traffic related, and neither of them, met any of the standards essentially. One standard that I think is prohibitive is the 10% of the population. So I'm wondering if there's if administration would recommend perhaps a local petition policy of some sort. Because a lot of these issues are going to be, just kind of particularly relevant for a small segment of the population, like a street, for instance, in this case. And so, meeting the standard of getting 10% of the population to sign something that's only peculiar for a street, it seems kind of tough to do. So is it worth having a policy? And I guess, what is the correct process for people in this type of situation? Thank you.
Administration.
Through you, Mr. Mayor, I don't think a policy is necessary. The parameters are clearly laid out in the MGA, and the policy would just be repetitive of those parameters. We can't change those parameters. We can't change it to say 1% of the population or anything like that. We have to follow the Municipal Government Act. So,
I have a question because I actually live in this cul-de-sac. If it's a cul-de-sac, why can we not just have a cul-de-sac sign? Why do we need to petition for a cul-de-sac sign?
through you, Mr. Mayor, because it's defined in the MGA what constitutes a petition, and we can't go outside the parameters of the MGA. Otherwise, it's ultra vires.
But is there a signage bylaw, or is there something, if we could just request a sign and not petition? Because cul-de-sac's a cul-de-sac?
What I always say to residents, Mr. Mayor, when they ask about petitions, petitions are one of the most ineffective ways of trying to deal with municipal government. The best thing to do, if you have a concern from a neighborhood, etc., start out, meet with administration, talk to them about your concern, and if you don't get the answer you want there, then you appear before council and make your case to council as to why you need, whether it be signage or whatever the issue is on that. The reason.
So when we get back to this cul-de-sac group, can we give them the name of the administrator that they can reach out to so that they can do this process the way that you're recommending instead of through a petition? So in other words, if a petition's the wrong way to go about this, what is the right way to go about getting a cul-de-sac sign? And if it's through an administrator, can we please give them the name of that person to contact?
Through you, Mr. Mayor, it's Doug Legore, the Chief Administrative Officer. That's where you start.
Thank you, Mr. Legore. I go now to Councillor Montgomery and then Councillor Peterson.
I've been demoted.
Oh, sorry, Deputy Mayor Montgomery. That was no slight,
Okay.
just a flub.
That's okay. So yeah, maybe like what I'm trying to say is like maybe, you know, like rather like let's not have like a petition, you know, that has to qualify, you know, for the MGA rules. Because you know, like somebody could come before council and say, hey, you know, my street wants such and such, but they maybe don't actually represent the majority view of the people on their street. So could we have something that's like specific to Strathmore, not call it a petition necessarily, but just have rules like similar to what, you know, the MGA says, where it's like, okay, you have to get, you know, the signatures, you have to get somebody to witness them, you know, you have to get whatever, you know, and that way it's, at least it's kind of, we know that they're officially representing more than just their own kind of, you know, view essentially when they come to us, or they come to you essentially.
Through you, Mr. Mayor, we could take a look at that. You know, we've been approached many times by residents on many issues.
Yeah.
Lots of them. In the time I've been here, I don't know how many, there's probably 100 different inquiries that have come in and that we deal with them.
Yeah.
Some of them satisfactory, some of them not satisfactory, but the residents understand why we made the decision we did. But we can take a look at a policy. Thank you.
Thank you.
I'm wondering if we could also involve our communications department to maybe put out an easy-to-follow little guide on our town Facebook page as far as what a petition involves at this point.
Well, we currently have citizen inquiry forms. That's one of the best ways to start. Those things are responded to.
Thank you. Councillor Peterson.
Thank you, Your Worship, and through the chair to the CAO. In addition to the communication, citizen communication forms, I think that our public sometimes doesn't understand how many resources you have at your disposal, because in addition to the operations staff that you have, your connection to bylaw enforcement and the RCMP and to the Traffic Advisory Committee. So you have many avenues that you can access to address something like this and work with community to resolve outside of petitions. And thank you, Your Worship.
Thank you. Deputy Mayor Montgomery.
Thank you. Yeah, I guess my question is, why are we not, you know, say, installing the cul-de-sac signage? Like, why are we telling them, this group, and besides the fact that it's not a legitimate petition, why are we saying no to them about this?
Well, I was going to turn to Jamie and ask about precedent and the number. I did a quick count today. We have about 50 cul-de-sacs in the town.
Yes, through the chair, actually, I think the count we came up with was closer to 60. Large majority don't have cul-de-sac signs, and that was one of our concerns, that is if we start putting up one cul-de-sac sign, then we'll get many requests for more, and there's a cost and an operational impact of that. We also reviewed the children playing sign. A lot of the technical advice we've seen is that produces a bit of a false sense of security for children who unfortunately would play on the street. We don't want to create that situation, so that's why we decided operationally not to put up either of those signs.
Thank you.
Yeah, thank you.
Thank you, Deputy Mayor Montgomery. So we do have a motion on the floor from Councillor Peterson.
Just wondering if I could add a slight amendment to it.
You can offer a friendly amendment, yeah.
I'll try. So it's that, so I'll reread the part that would be the same. The council accept the petition regarding Parkwood Place cul-de-sac, and that children playing signage as information, and that council direct administration to contact this group regarding Parkwood Place signage to inform them that the signage will not be erected. Here's the addition, but we'll advise them the proper process to go through.
I think,
Your
Councillor
Worship,
Peterson?
if I might just say in relation to this, I understand what Councillor Wiley is talking about, and I think that there's good merit, but perhaps what is best that would be added to this, that signage will not be erected and that administration will advise of alternative process for communication. I defer to administration, Your Worship.
Thank you, Councillor Peterson. Mr. Legord, are you comfortable with that as far as a direction to you?
Yes, if that's a suitable amendment to Councillor Riley.
And Councillor Wiley, are you happy with her wordsmithing to your amendment, your friendly amendment?
Yep, she's a fantastic wordsmith.
Okay, thank you. So do we need to have that new motion read with the friendly amendment, Jonathan?
Through you, Mr. Mayor, you need to vote on the amendment first and then vote on the motion as amended.
Okay, thank you for that. So we have a motion on the floor for an amendment to the original motion, and I'll call that. All in favor of the amendment? And the amendment motion is carried. And then now the amended motion, do we need that read now, Jonathan, for official records? Yes, Councillor Peterson, are you? Oh, you have it, Jonathan?
Yep.
Thank you.
I hope so. That council accept the petition regarding Parkwood Place cul-de-sac and children playing signage as information, and that council direct administration to contact this group regarding Parkwood Place signage to inform them that the signage will not be erected, but will advise them on alternative processes to the group.
Thank you. Now that we have that amended motion on the floor, is there further discussion on that?
I just have one question. Okay. Your Worship, it has nothing to do with the motion. It's a process question to Mr. Strathmore. Is it permissible to, and I'm talking just for a new council group, and we're talking soon about procedure, is it permissible to just do friendly amendments? It's been a practice of the past. Or are you trying to initiate a more formalized and strategic process for this council to follow?
Through you, Mr. Mayor, friendly amendments are acceptable, but I think this is more than a friendly amendment in this case.
Thank you. So we do have that motion on the floor, and I'll call the question. All in favor? And the motion is carried. Thank you, everyone. That brings us to 8.5. We're talking about potential committee appointments. And the first one deals with community futures.
Through you, Mr. Mayor, we have a draft motion we can read, and then council can insert the name that they want. If you would, please, John.
That council appoint councillor as you're choosing to the Community Futures Wildrose Board for a term of 1 year ending October 31st, 2022.
Thank you. And if I have, if I'd like to nominate a person, do I have to relinquish the chair, Jonathan, to the deputy mayor to add that to the motion or to make that motion?
Through you, Mr. Mayor, I think you can make the motion. Putting the name in would be in order. Without,
okay, but
without relinquishing the chair.
Okay, so I would move that motion and insert the name Jason Montgomery. And do you want me to speak to that motion, or am I allowed to speak to that motion?
You're allowed to speak to the motion, Mr. Mayor.
Thank you. The reason I thought of Councillor Montgomery for this one is I think it fits his schedule well. He has a business background, and I think he'd be a good position. It'd be a good position for him. I think he's got a lot of interest in the area of small business and supporting small business, and that coupled with his own personal schedule, it would fit in well. I thought he would be a good nomination to bring forward, but I'm happy if other people would like to bring someone else forward as well. Any other nominations or anyone interested in that who would like to be brought forward? And I want to say this is a little bit different from what we were going to do on November 10th, but the two nonprofit groups, or the two groups of Community Futures and Wheatland Housing Management Board, expressed a desire to know who our representatives were as soon as possible. Some are starting their meetings and are looking for the newly elected councillors to join as soon as possible. There's some serious business going on, and they need to keep their momentum going. So I don't see anyone else bringing anyone else forward, so I'll call the question. All in favor of the motion? And the motion is carried. Thank you. And that brings us to item 8.6, Wheatland Housing Management Board. And Mr. Legore, did you want to speak to this again?
Jonathan has a draft motion to read out. Thank you, Mr. Mayor.
Thank you, Your Worship. That council appoint Councillor blank as per your choosing, and Councillor as you choose, to the Wheatland Housing Management Board for a term of 1 year ending October 31st, 2022.
And I don't know if this is proper, Jonathan, but is this a time that we can ask if people are interested in being considered for this committee? Is that? So I'll turn to council and say, ask you if there are any people who would like to be on this. Councillor Peterson, Councillor. Okay, so we have a lot of people. So we would have to nominate each one then and see how the voting goes. Is that correct? I want to make sure we do this the correct procedure.
To you, Mr. Mayor, that's what the problem with trying to deal with us at a meeting like this. You should have the decision made before you come in here as to who's going to sit on these committees.
Excuse me.
Deputy Mayor Montgomery?
Would it be appropriate, I know Councillor Peterson's very familiar with this stuff, so could we maybe temporarily appoint her to attend the next meeting, or even just, it would be good, I think it'd be good to have Councillor Peterson on there as one of the, because we have two people, right, that we can do?
We do need two, and I'm just wondering if this would be a time to go in camera to quickly discuss this and then come out of, not that we want to hide anything, but it would give us a chance to discuss.
Through you, Mr. Mayor, that's certainly an option. You can go in camera and have a discussion on this as to who your rep should be, and then come out and make the motion.
Does council feel comfortable with that? Are you good with that? Doing that, going into in camera briefly?
Sure. Because it's Your Worship, just because it is unusual and this is a relatively new council, I see that as being appropriate.
Thank you. So then I'd be looking for a motion to go in camera.
I will move we go in camera.
And then Jonathan, do we need the FOIP section number?
Under section 24 point...
Section 24.
Section 24. All right.
Thank you. So we have a motion to go in camera. All in favor? Councillor Wiley? Aye. Okay. Thank you. So we're going in camera at 8:29.